All right, it's no secret Americans aren't feeling particularly optimistic about their personal economic situation. And that's according to the University of Michigan's monthly survey out today that confirmed it, which shows the Consumer Sentiment Index fell about 10% in May, dropped to 69.1, its lowest point in 5 months. The survey's director, Joanne Su, attributes consumer pessimistic outlook to inflation, high interest rates, slow income growth. However, Su notes that consumer sentiment is up 20% from a year ago and 40% above the all-time low, which was June of 2022. For a closer look at these numbers, I want to bring in Mindy McIntosh, founder and CEO of McIntosh and Associates. Mindy, good to have you back.
Thanks for having me.
So today's report shows an 8.1 index point decrease in May, its lowest point in 5 months. Sentiment has been relatively stagnant over the previous 2 months. So what happened in May?
I think we're really seeing that folks are seeing that calm almost before the storm that they might be seeing. You know, the VIX report that came out showed a level 12, and that just really starts seeing that people are just feeling a little bit nervous. You're right. What is it costing for gas? We're heading into summer. What are things happening at the grocery store? What about mortgages and rates, and when are the Feds going to make some cuts? So you're definitely just seeing some transitioning there. We're seeing some timeline. People are getting a little bit anxious. What they felt was a pause, what should be happening. So more so than ever, folks need to have a plan. Instead of just getting worried and thinking so much into the details, make sure they're getting with their advisor, with their people that are helping them to really find the even keel of how do we diversify and really approach this.
And then how are the markets reacting to today's sentiment index? How much do investors weigh into this survey? How much weight do they actually put into this survey, investors that is?
I really think on the investor standpoint, it just depends on how much they're reacting, because there's so much buzz even around different areas, right? So people are really worried about inflation. Is the inflation going to stay? What about interest rates? But on the flip side, they're also seeing all this positive news about NVIDIA and where should we put our money? Are we better to go into tech and AI segments? And really, what should the consumer do? So I think sometimes they really need to hone down in on what is the plan. And more so than ever, it's just looking at where are you at today? Where do you live? When are you looking to retire? What is your current age and your demographics? Because it does affect everyone. But realistically, how much impact does it have on your own family? It really depends on your own situation of when you're looking to retire, how much you have invested. What are you actually spending too? So some people need to look into summer and say, what is their disposable income and where should we be guidelining that into what is important in their own financial future?
Yeah, also, it's a special year because with the election right around the corner, this drop in consumer sentiment due to the ongoing inflation, high interest rates. How do you think the Fed might balance these issues when deciding future interest rate changes? I mean, we're still hoping for a decrease. We don't know, it might stay. Hopefully it doesn't increase, but we're seeing credit card delinquencies rise. Debt is at all-time high, right? So people are saying that they can't buy a home right now, and those who did, they need to refinance. So this is really a top issue.
It does. It kind of starts that domino effect of the trickle down. So I really feel like Feds almost might reduce interest rates kind of almost more last minute, kind of seeing what needs to happen. They needed to boost economic spending. I think we're going to see some more rounds, people being able to either refinance or get a new mortgage. But the uninflation rates have really stayed somewhat stable. So in my opinion, we really need to take a look at that. Short-term CD rates are still much better than long-term. So having folks really develop, how are they going to have enough money to sustain through their working years? How are they going to live in retirement years? We need to segment some of that, look at some of the wins, segment that off, and really even look at legislative risk on taxes. So how are we looking at that in the future? And even as today, to making sure that our investors of today are investing in the new way, making sure that their money is going well driven to their own aspects, and to make sure that they're keeping as much as the hard-earned dollar at the end of the day, and just watching for these trends as they come along.
Yeah, all good advice. Mindy McIntosh and Associates, thanks for your time today. Appreciate it.
Thank you.
For all our viewers asking where One America News is heading in the future, we would like to introduce you to OAN Live. OAN Live is the best way to stay up to date on all of the hard-hitting, straight-shooting, national and international headlines. And the best part is, OAN Live is only $4.99 per month. All the credible, honest, unbiased reporting One America News offers at a fraction of the cost of cable. Just go to OANN.com to easily sign up for OAN Live and stay informed.